Have you seen people saying that fundamental analysis is much more important than technical analysis, vice versa? Which one you rely on? All right, in this video, we want to talk about fundamental analysis or technical analysis and which tool we should use in our investment or trade. What is fundamental analysis, by the way? Fundamental analysis is a stock market is an evaluation method used to assess a stock's intrinsic value by examining financial and economic data or factors. Analysts look at the company's revenue, earnings, profit margins, balance sheet, and broader economic factors or indicators that like interest rate, inflation, industry trend to determine if the stock is valuable, undervalued, is priced fair valued, or even overvalued. What's the pros and cons? Let's start with pros. Long-term insights. Fundamental analysis will help you to identify the long-term value for individual stocks, making useful for investors basically, not traders or short-term traders obviously, but for those ones who are looking for investing in 1, 2, 3 companies and they're looking for fundamental data. So it gives you bigger perspective of the company and the healthy balance sheet and healthy growth for that company as well. So when you're reducing the speculations, this means you are just focusing on a bigger picture, on the bigger data, on the fundamental analysis rather than technical analysis, just looking at the short-term time frame. So you are not concerning about any like a short-term movement within stock because you don't care basically. You are just getting rid of all speculations. And broader perspective is the last one. So considering both company's performance and also the infrastructure, the country or the environment that company is founded with it is very, very important. For example, if you're looking for buy a good company within that country is not that stable, or there are lots of geopolitical risks within that country, so you're not gonna invest on that one because you say, I know that company is pretty good, very profitable, but geopolitical tensions can impact my investment a lot. So what's the cons? It's time consuming, requires extensive research and analysis, which can be complex and time intensive. So you need to burn your time to understand the data sheet, the balance sheet, the cash flow statement, the balance sheet statement, income statement of that company. And you need to consider lots of different factors to see that if that company is doing well or not. So that's one of the cons, but this is kind of like a part of the game, right? So if you're taking care of the fundamental analysis, you should just burn your time because you are investing in your money. Not a good deal or not a good idea scenario for short-term traders. If you're a short-term trader or even if you're a trader, you shouldn't pay attention to fundamental analysis just because you don't pay attention of that business or you just want to see price movement. So this is not ideal for a short-term trader. The last one is potential for bias. All of those assumptions, all of those factors are assumed based on the previous and current situation of that company. There are lots of different ways that you can understand what's the fair value and what's the intrinsic value within that company. I just bring very, very simple example just for argument's sake. Here is the chart and here is the analysis for Morningstar chart. So this is free for everyone. You can go to the Morningstar website and just press Google. It gives you Alphabet stock versus Morningstar fair value estimate. And as you see that, the fair value based on Morningstar is 209. So the price is 161.86 cents, which is undervalued. So based on fundamental analysis, this is buy. Regardless of the pattern of the chart, regardless of where are we at with the price chart, this is buy. Why? Because this company is 25% almost undervalued. And this is white mode company, which is fantastic. All right. But how about the technical analysis? We just look at next chart and I notice that we have a beautiful pattern, bullish pattern for Google. This chart tells me that we have a nice reverse head and shoulder, and also on the right shoulder you see that there is a nice bull flag is forming on a daily chart. So that's why myself and subscriber got in just right 2 days ago, which was somewhere around like a 165, 164 price was there. And we just got in just because we know that Google is a good company, and also the pattern, the technical analysis gives us a tool that we can buy at a very, very good level. In this method, we recognize a good company. We know that this is undervalued. And also, instead of investing in a company at the wrong time, we just got it at the right time. And after hours, Google announced their earning. And right now, price is trading around this pink rectangular, which is 178 to 183, which is fantastic. So less than a week, we got into investment strategy, which can be usable for traders as well. Here is the signal that I sent on, I believe, 3 days ago, which was Google trading around 165.34. Stop loss is 160. And there you go. Today, we just got a fantastic pop for Google. Google just popped at 177 after hours, and all targets hit. All right, folks. This is my method. What is your method? Are you relying on fundamental analysis or just purely technical? Are you investor or trader, by the way? Okay, so if you like this video, please smash the like button, share it with your friends for those ones who are looking for more data for stock market and how to invest in a stock market. All right, guys, so that was my first special video, and hope see you soon. Take care. Bye-bye.